There are some good ways to manage a trade if you want to try to get the most out of the market as you can, and I want to show you one of them. Hi there, my name is Russ Horn, and I'd like to show you the 3-bar high-low trailing stop methodology. What I'm going to do is I'm going to draw a horizontal line to begin with here. So what I want to do with this here is get it red. We'll make it thicker. We'll go thick enough to see. And with a line that is 3 bars length and selected, I have 3 nodes. Now, the 3 nodes on this horizontal line will represent a candle. So each node will represent a candle. Now, that's important because as we get into this, we're going to see how this works. So I'll be looking at the 3-bar high-low trailing stop methodology. So let's get into a trade. I'm going to draw a trend line across the top of the price, and this big bar here, this one closes above the trend line. This one could take us into a trade. So once that candle closes, once this big blue bar closes, this next one is going to open. I'll mark this off. So I've got this gray dotted line through this one candle. Now, this candle is currently forming. It's opened, and it is where we're going to place our trade. As soon as this blue one closes, this red one will open, and it's currently forming. Nothing here on the right exists, only this candle right now because it's forming. So the way this methodology works is I am going to count to the left 3 bars. The last 3 closed bars to the left of this red currently forming bar. So let's get rid of the trend line because we don't need that. So now what I'm looking for in a long trade, which is what this is, we're buying here. What I'm looking for in the long trade is the lowest low out of the last previously closed 3 bars. So if I take my tool, I am going to bring it down to just below the lowest low, which would be this 3rd candle. The first one has a low here. The second one has a low that's a little bit lower. And the third one has a low that's the lowest out of the 3. So that is where my initial stop loss would be placed. All right, so let's say this red bar finally closes and the next bar opens. So where I have this vertical line, this red little doji here, this candle is currently forming. So again, nothing here on the right exists yet. This one candle is currently forming. So now that we've moved candles, one candle has closed. It is considered a closed candle because the next one is opened and is forming. So I will count from that forming candle 3 bars to the left. 1, 2, 3. And out of those 3, I want to find the lowest low. And that would be, again, the 3rd bar. But now my stop loss gets to move up a little bit. Again, the next candle is going to open, and it will be currently forming. So I count to the left 3 bars, 1, 2, 3, and I get to move my stop loss a tiny bit. The low of this doji before is only incrementally lower than this big blue bar, so my stop loss does get to move, but just a tiny little bit. All right, and we can do this throughout the formation of this whole move. The next bar opens, this blue bar is closed, so I count to the left, 1, 2, 3, and now we get a big jump in our stop loss. So the lowest low of these 3 bars is the first bar. Its low is lower than the other 2. And as we move, stop loss remains the same because that same bar has the low that is still lower than the bar to the left or to the right of it. And again, 1, 2, 3, one more time, the stop loss does not move. It stays in the same place because now it's the last bar, which is that lowest low. And as we do this, we are going to continually move our stop loss to encompass the lowest low of the last 3 closed bars. Sometimes our stop loss isn't going to move. Sometimes it's not going to move for 2 or 3 bars as they form. And other times it is going to make huge leaps and bounds into the right direction. So this blue one opens, stays the same. This red one opens, get to move our stop a little bit. This blue one opens, our stop loss gets to move quite a bit. This other red one, stop loss moves a little bit more. And with this 3-bar high-low close, we're going to find that we can avoid some chop in the market. Now, eventually, what we're going to do is find that this red bar opens, and on the way there, our stop loss is moving up incrementally, up, up, up. And then finally, at one point, we are going to be taken out of the trade as our stop loss gets hit and the current bar reaches below and tags that stop loss. So we can get a really nice section of the trade by using the 3-bar high-low close. Now, if you want to be a little bit more conservative, you can potentially get a little bit more out of a trade, but when this happens, you might end up giving a little bit more back on the retrace, and that is taking that 3-bar high-low close and moving it to a 5-bar high-low close. So I'm going to broaden this by 2 candles. So we will be looking at the lowest low of the last 5 bars. So as these candles move, we're not looking at 3 bars now, we're looking at 5 bars. And that's going to prevent some chop from getting us out of the trade. Now this, where we got stopped out with the 3-bar, our trade would continue because we are looking at 5 bars now. So as this little, well, let's go back by 1. As this one that stopped us out is forming, if we're using the 5-bar, 1, 2, 3, 4, 5, number 4 bar is lower. So that is the area where we'll be using the stop loss. We don't get taken out yet, and the trade continues. And the market keeps moving up. And eventually, we will get stopped out in here. Now, we never move the stop loss backwards, always moves forward. So this is a 3-bar got us stopped out here, and the 5-bar got us stopped out a little bit later. And sometimes it's not going to work quite as well as that. If you use a 5-bar high-low close, we might get stopped out at a worse price simply because there is a big move in one direction and then a big move back in the other direction. But this is a nice way in order to capture as much profit as we can in a trending market. Now, this was the lows. We're going to take a really quick look at the highs. So we've got a potential short trade. I'm going to draw a trend line. We've got the close below the trend line. So what we'll do is once this candle closes, we'll be looking at this candle opening. So we'll draw a line here. This candle opens and I look at the last previously closed candles, the last 3 closed candles, 1, 2, 3. And from there, my stop loss goes above the highest high. So now the candle that I'm on closes. This blue one prints, and then I move down to the last 3 closed candles, 1, 2, 3, and this middle candle has the highest high. So this blue one closes, this red one opens, 1, 2, 3. The high is still on the same candle. I'll delete this. And this is the same process, 1, 2, 3. So now we get a move down because the center candle is the highest. 1, 2, 3. That end candle remains the same. 1, 2, 3. We get a little bit opportunity to drop it down. But this is how we can trail this. Now let's take a look at this area here, this little section. So we're going to move this over and over until we potentially get taken out of the trade. So every time I'm moving this vertical line, that is the current candle forming. And 1, 2, 3 bars to the left of it is where our stop loss is going to be evaluated. And we survive this little chop in the market. And we survive until 1, 2, 3, right in here. Our stop loss ends up following all the way down without being taken out until this point here, where this blue bar takes us out of the trade. So we get into the trade here, survive some chop, and we get taken out of the trade in here. Again, if this is too tight, you can use a 5 bar, or you can broaden it to as much as 10 if you like. But my favorite setting for this is 3. So we're looking to the left at the last 3 closed bars and taking the highest high or the lowest low of that and moving our stop loss just above or just below the highest high or lowest low of those bars.